Righty ho, everyone, and happy Australia Day to those of you who are in Australia. I trust you are or survived the day, number one, and that you've had a great day to date. Of course, it's not over, and I am pretty sure there'll be still people out celebrating Australia Day all over the countryside. If that doesn't apply to you, then happy New Year to you, because I haven't had a chance to catch up with most of you since we turned into 2025. Boy, oh boy, what a year 2025 promises to be from a trading perspective. Um, Lots of things happening as usual, but I think the major focus for me, certainly in the near term, will be the second term of one Donald J. Trump and what that means for the markets. Already, he's moving the markets with every little stroke of a pen that he makes, everything he says, and I expect that will continue throughout the year. Surprises are going to be um, the hurdles that we have to jump over, and for that reason, it's probably a good idea to be just a little bit conservative when it looks like he's going to do something. Of course, X, or is it his own Twitter feed these days? I don't know, but you got to keep an eye on him, I think. Anyway, speaking of Trump, I thought I'd start the session today with something that I presented prior to the election back in November, because I thought it might give us an indication as to what may lie ahead. As you recall, this is not the first time that Donald Trump has been elected to office. First time was a little bit of a surprise to most people. Wasn't really given that big a shot, but this time, pretty much a landslide, as has been reported in the American press, and he really didn't have that much opposition, it would seem. Interestingly, I thought it was a good idea to check the major asset classes against the US dollar prior to the election. I'm going to share those with you now and see what has happened since the election and where we are currently in the cycle of Donald J. Trump. So I'll do that for you. It's not definitive, of course, and it's not meant to be definitive. It's just meant to draw your attention to the fact that history does at times repeat itself. History repeats itself all the time. Why? Because we are human beings. And I think actually when I first came to trading, it was pointed out to me how sheepish we are. And I don't mean shy by that. I mean that we do similar things all the time. For instance, I was at a presentation and sitting in a seat, there were probably 50 other people there. There were no assigned seats, there were nothing like that, and they had an intermission. And there were no pens and no papers or anything like that on the tables. So we had an intermission. 10 minutes later, we came back and everybody sat in the same seat. Coincidence? No. We all do the same thing all the time. Back in 2016, which is what the bottom chart here represents, the dollar index. This is the week before the election of Donald Trump for term number one. And price immediately rallied on the dollar and went for 2, 4, 6, 8, 9, 10 weeks or before it started to turn around. That 10-week or 9, 10 week period just happens to coincide with the difference between when a president is elected and when a president takes office. The inauguration has just happened a week or so ago. So I figure that is a reasonable time frame to compare. So the dollar index post the election, as I said, went up. Sorry, here in 2016 went up and up and up and up. Not exactly the same, but it started coming down a little bit before he took office. Last week, he took office. Was it last week? Anyway, it's a week or so ago, and you can see what happened as a result. Is it as a result is the question, and I'm not prepared to say definitively that that is the result of him taking office. But is it coincidence? Not sure. In 2016, what happened was we had a little bit of a relief rally off the top, and then things went pretty sour for the dollar for quite some time until, of course, here we are back in 2024, where it's just gone nuts, absolutely nuts, with only, what, 2, 4, 6, 8, 10, 12, 14, 16, 17 weeks, 3 of which have been negative, everything else positive. For that reason alone, there will be many people tell you, I would be one of them, that the dollar is overbought, and it will inevitably, in my humble opinion, turn around and come down. Is it going to be now? Could be. And if it follows what happened in 2016, then we might get a bit of a relief rally, and I'll be looking for that classic signal, the lower high, to get me into a short on the dollar. Let's compare it against gold. We look at the gold chart, 2016. This is a little bit different once again, where gold in 2016 had already come off its high, and leading into the election, had rallied a little bit. But as soon as the election or the result was known, bang, down went gold with a vengeance until 1, 2, 3, 4, 5, 6 weeks after the election, and then for the next 4 weeks, it rallied and continued to rally. And we all know now that gold is way, 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 way up here. Is it overbought? I'm not going to enter into that argument because I'm not a gold expert by any stretch of the imagination. But if this one follows suit, then post the election, post the inauguration, gold just continued to go up. Have a look at the euro, which of course is pretty much the antithesis of the US dollar. And this chart looks very, very familiar, where in 2016, we'd had a little bit of a relief rally, come off the bottom of a range, really, I'd have to say. And as soon as the election took place, bang, the euro crashed for 1, 2, 3, 4, 5, 6, 7, 8, 9, 10. Here we go again. Same period of time. And when Donald Trump took office, things changed. Is that going to be the case this time? I do not know, but I'm kind of hinting that I might be going that way, right? That seems to be where I'm at. So what did we get? After the inauguration, we got a bit of a sell-off on the euro after a rally. Kind of formed a little bit of an inverted head and shoulders here. But as soon as we got that second higher low, bang, away she went. Are we in the same situation? We've had a big rally last week. Pull back to here, another inverted head and shoulders, maybe. That may take a little bit of time, as it did down here. But that, again, is indicating to me that there may well be a reversal coming on the US dollar. Two more, actually. We'll have a look at, what is this one? This is oil. Is it oil? Yeah, it's oil. Okay, so oil, this does look very, very similar, to be fair. Came down as a result of the election for 1 week and then rallied. Consolidated here this year, or 2024 into 2025, before it's taken off and leveled out. Is this going to be the same? Maybe. I don't think that's as definitive as what we've seen prior. But this one is, and it's my favorite chart. It's the US dollar versus the Singapore dollar. Yes, there is a bit of a disconnect in this area here, no question. But everything else looks very, very familiar. And post the election, dollar Sing rallied its little socks off, actually. 1, 2, 3, 4, 5, 6, 7, 8, 9. Here we go again. 10 turned around. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10 is where we are at the moment. And last week we were delivered that incredibly bearish engulfing bar. To my mind, there is evidence enough to suggest that the dollar is potentially in a position where it will turn around against, or it will do similar to what it did in 2016, post the election and post the inauguration. So I just thought I'd point that one out to you, those who haven't seen me present that before, because I think it is pertinent. How do we put that together and trade it into 2025, I suppose, is the next question. In fact, it's the only question at the end of the day. Well, what I'll be looking for is, as always, confirmation that this may happen or is about to happen. I've got a couple of favourites, and I've just pointed out this dollar versus the Singapore dollar as one of the best. I'm going to look at the market structure on that at the moment. So let's take a look at US dollar versus the Singapore dollar. Actually, I'll put up a new chart. That might be an idea. US dollar Sing. Chart window, we will use a blank chart. And we'll use the weekly, why not? A little bit softer. There we go. So what do I see? And the way I trade, guys, if you've been watching me before, you probably recognize that really what I'm looking for is something bouncing off something. Whatever that may be, it could be a rectangle, it could be a triangle, it's not a circle, but it could be a trend line, it could be a weekly support level, it could be a daily support level, it could be anything like that. In this instance, I see this kind of thing. It may even be tighter down here somewhere, but you'll get the idea. I also see this V-shaped recovery, and then a very, very strong response to that. So that sequence in my mind is over. So I like to work in cycles or market structure. Market structure for me in this case is a rectangle. And we bounced off the top of that rectangle. So what I'd be looking for now is price to go to the bottom of that rectangle minimum, and then look for something that tells me whether it's going to go through there and challenge this low, or whether it's going to bounce off there and make another attempt to take out the highs. Can I trade that? Well, I can, but will I? No, because this is something that tells me this is possible. It's not something that tells me it's confirmed yet. You see over here where this exact same thing happened. We had a very, very strong bearish bar, but what we didn't have was a lower high based on that. We were delivered that lower high. Now, this is a weekly chart, don't forget. So I'd be looking for that, not on the weekly, but on the daily or even a smaller time frame, for price to come back to, say, here, that level, which has been resistance, support, support, support. So it's a good level. So I'd be looking for price to come back to there. That would be optimum for me. Is it likely? On the strength of that bar, probably not. So I'd have to pick something a little bit closer to there. And that looks like that level to me, which really is the breakout level here. And of course, the top of that V that I mentioned before. So I believe that an entry around about that 1.3557 mark would suit me down to the ground. So that's exactly what I'll be looking for on US dollar versus the Singapore dollar. As I said, that could easily happen on smaller time frames. In fact, it may well have happened on a smaller time frame where we've had a break. Bit of an ugly neckline here, I've got to say. If this was to be a neckline, I would much prefer to see price come back up to here, which is exactly where I said I'd be happy to trade this short anyway. So this one may have got away from us already. And if it has, it should continue to deliver lower lows and lower highs. If it does, I'll be happy to trade that sequence as well. So dollar versus the thing, I think, is my favorite currency at the moment to trade against the US dollar, given that theory or thesis that I have that the US dollar is about to turn weak. I've got a couple of others that aren't relative to the US dollar. In fact, do I have one that is? Probably not. Oil, no, oil wasn't so much. So I've kind of red flagged that one as the favorite against the US dollar. But you could look at the euro. You could look at the Aussie. The Aussie's doing very well against the dollar, against most things last week. I actually have a look at the currency indexes now, and we can see if we can make a decision on what's the strongest, what's the weakest. Okay, that's not what's supposed to be happening. Let me go back there. Sorry about this. Okay, that's where we're supposed to be. So the dollar, US dollar index, as I pointed out earlier, it has showed signs of weakness in the last 2 weeks. However, it is at a support level, and the market structure that I see that was broken and now is being retested is, of course, that rectangle. So what do I do? Well, in my world, it's one of two things. This either comes back underneath that line, which is the top side of the rectangle, and then looks to retest it, which would then deliver me. So break through here, come back, retest that. That would deliver me the lower high that I seek. But I would also consider trading a lower high up here somewhere if I've got room to get safe before that line there. I do not want to trade into that without having no risk. I need to have no risk at that point, or very, very low risk if I am to trade that from there. So dollar index is kind of agreeing with my thesis at this point, but it's not there yet as a trade. I mentioned the Aussie, and this is the upside down version of what you just looked at on the dollar index, pretty much, as they usually are. This one's a little bit different. It has come back inside that rectangle. And this will confirm to me if it fails to go back outside it, right, in particular. But if I get a little bit of a seller bar this week, then next week I'd be looking to buy it up here. Again, that could happen on a smaller time frame during the week, daily, 4 hours, something like that. And if I were to get that higher low in here, then I would look to trade Aussie versus the dollar long. I won't be trading them all against the dollar, right? I want to actually have some semblance of sensibility regarding risk, and this is not yet proven. So Aussie's definitely right up there. Canadian dollar, not so much. The difference between the Aussie, right? You'll see that the Aussie has broken out this big seller bar from 3 weeks back. Canadian dollar has not done that. It hasn't broken that level. So this is still range bound inside that candle. So I don't want to be saying Canadian dollar versus the US dollar, although I do like the US dollar CAD chart. I'd most definitely be looking for Aussie dollar over dollar CAD. British pounds, similar to what I just described on the CAD, failed to take out this bar so far. So prices inside that, there's some strong resistance dead ahead for the pound. So it would not be one of my favorite. In fact, if you're looking to not trade against the US dollar, there's a little bit of, I suppose, hint to be had by these charts. And the Aussie having broken that candle, the pound and the CAD having not, why wouldn't the Aussie be favoured over the pound and be favoured over the CAD? Just saying. Swissy, wow, this thing's just mad, absolutely crazy, this currency. If you have a look at these candles, it seems to rally and then get hammered, rally, get hammered, rally, get hammered, rally, get hammered, rally, get hammered. It is really tough to trade on a smaller time frame. I think you'd be having a horrible time trying to place a stop loss if you were selling this short at the moment. For that reason, and not for that reason alone, because we haven't reached the bottom here, I'm probably a little bit on the bearish side for the Swissy, but don't be surprised if yet again we get a big rally and then a smash in. I'll be hesitant to trade this one, but it does look bearish. Kiwi, similar to the Aussie, which is interesting because the Australian dollar, the Kiwi, and the Canadian dollar, all very, very similar due to the fact that they're resource based. The Kiwi, like the Aussie, has broken that bar from 3 weeks ago where the Canadian dollar hasn't. Hint, hint, perhaps Kiwi is going to outperform the CAD as well. We will see. Japanese yen, my goodness gracious me. I wish I could reverse every trade I've had with the yen involved over my career. It would be profitable, to say the least. I cannot catch this currency at all. I'm going to stay out of it right now because I have no idea what happens to it next. And the euro, unlike the pound, unlike the CAD, has in fact taken out that bar from 3 weeks ago, and in fact the bar of 4 weeks ago, and has come back into an interesting position above that weekly trend line. So a little pullback on the euro this week would be interesting, and looks to be in a potential buy in the next week or so. So where does that leave me? It leaves me in a couple of places. It leaves me strong the Aussie. It leaves me strong the Kiwi, potentially weak the dollar, and toss a coin on most of the others. But as I said, I think Aussie and Kiwi is better than the CAD. Aussie's better than the pound. I think that's, and the Kiwi is better than the pound as well. So I think they're probably ones that are worthy of my attention. So let's go and have a look at that. See what that looks like. Not there, but there. Aussie versus the Kiwi. Not interested because I think both are in a similar position. But Aussie versus the CAD. We shouldn't have all these lines here. Let me go back to here. They're all trades. Better not do that. Sorry, guys. I'll have to use that one. There we go, back there. Sorry about all the lines. These are just things that stay on there when you're on Market Watch. So I'm bullish the Aussie over the CAD. Can I trade the Aussie over the CAD? Well, let's have a look. If I can get rid of that line, be good. Don't worry about it. Very strong 2 weeks that we've had. And where we are now is at this former resistance level. Has been support, has been resistance here, has been support, has been support. Do I want to trade through that? No. How would I approach it? Let it break and be retested, or let price come back to here so that we can get some money in the bank before we hit that line again. So Aussie CAD's not an option. Aussie pound. Aussie pound, I've only just got out of a trade on Aussie pound, but this looks fantastic to me. Those of you who are familiar with my slingshot candle patterns will recognize that as a clear indication that if price comes back to this level, it will fall. That's a classic setup known as the false break for me. So pound versus the Aussie, very, very high on my watch list for the week. And in fact, if I wake up in the morning and price hasn't come down to here as a gap, then I will be placing an order on pound versus the Aussie short under here. I'll probably have to get my stop loss up here or maybe even here to be really safe, but this has got potential to go quite a long way, so that really won't be of a concern to me. Aussie versus the pound, Aussie versus the CAD, Euro versus the pound, and Euro versus the CAD. Euro versus the CAD. Impossible to trade it for me at this level. It's too high, way too high to trade it. And Euro versus the pound. Actually, this is quite the opposite to what I'm seeing in terms of a market structure. I pointed this out last week to my group where we had this broadening price pattern. Hang on, I'll just tighten up a little bit. Where we had this broadening price pattern. And again, my go is market structure. And when I see a structure like that, I'm looking to trade it off the top of there and off the bottom of there. It gave us a beautiful reversal bar, the key reversal bar. So it is what I call a game changer bar for the week. And the only thing I have to work out is whether I want to trade it as that or if I want to wait for a lower high in here. The flavor that I seek is off the monthly chart. And I call this the big boss. What is actually driving this market at the moment? Is it a head and shoulders? Is it a double top, quadruple top, quintuple, sextuple, septuple, octuple? Is that a word? Don't know. Is that driving the market, or is this driving the market? And for the life of me, I can't pick it because we've come back inside that range. So I point that range out to you. We've now come back inside it. That could be anywhere up here, frankly, all those tails. But it does seem to be to me that we are going ultimately to fill this gap up here. So euro pound is in a buy zone for me on the big chart, not in a sell zone. For that reason, I would find it difficult to trade this short until I got confirmation that it can actually go short, and that would be the lower high. You can certainly fill that area there, no problem at all, and that's going to produce a lot of pips. So that's what I'd be looking for. But I don't want to take the risk per se on that one candle. Euro pound, euro cad we've done. Kiwi pound, Kiwi pad, Kiwi CAD. Let's go with pound Kiwi. Same as the Aussie, right? Pound versus the Aussie and pound versus the Kiwi. Very similar. The only difference here, and it is quite a difference, I suppose, when you look at it. That level there hasn't been taken out. I think it has on the Aussie. Yeah, it has. That level there has been taken out on the Aussie, but on the Kiwi, it has not. So we're still above that level. So that makes it far more difficult to trade pound Kiwi short than it does to trade pound Aussie short. And finally, we wanted to have a look at Kiwi, Euro Kiwi, right? Euro Kiwi, I would like to see, well, I love where it is, let me put it that way. The resistance level is perfect. We've had a false break of that resistance level in my world, and there it is there. You could have entered underneath that bar if, and I think I spoke about this with my group last week, you could have entered underneath that bar if it wasn't for the monthly pivot being in the way. That problem has to a degree been solved with this bar here 2 weeks ago, which was a reversal bar that's really failed at this point. This is a really interesting chart, actually. I like it. I like it. I like this for a short, but I don't want to trade it on the weekly. Okay, it's clearer for me on the daily. So you can see how this trend line here has been very, very strong as resistance to this point. And yet again on Friday proved to be a resistance. I want to see that proven as resistance one more time, but not in that fashion. I want to see it proven as resistance to give me, once again, the false break. Now that will be looking like this. You can probably take that line up to there even. So either one would be happy with. Price has got to break that level or that level and then fail above it. So if I was to see that happen and I got a retest of either that trend line or that trend line, I could sell this off. But I think it's going to be far easier and cleaner trading Aussie versus the pound. So pound Aussie short, and even Kiwi versus the pound. But these are all on the watch list. If these other two don't set up, then this one may well be that the one that we want to trade. Like this, it's really nice. And the fact that we did get a close above that level, but look how many times we haven't. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14. Wow, it's 2 weeks, nearly 3 weeks of price being unable to come back above that 184.15 level or something like that. So Euro Kiwi looks to be decent short, but if we go back to what we discovered on the currency indexes, Aussie, Kiwi, Euro, they were the three strongest, weren't they? Interesting, eh? All right, I'm going to leave it with you guys. That's going to be it for the week from me. Obviously, if you're in my group, there'll be analysis on Monday, Tuesday, Wednesday, and Thursday mornings. If you're not in that group, then I hope you have a wonderful week ahead and a wonderful 2025. Thank you so much for being here. And the next presenter next week, I'm not sure who that is, but they'll be here.